Hey everybody, it is Tom Sheehan here with your Greater Boston 2026 quarter one real estate market update. Whoa boy, it has been a interesting first 3 months, and I held off on this update for most of April to kind of see where things were headed here so I can give you the best information because it's been an up and down first few months of 2026, and we'll get into the reasons for that. And if you saw my end of 2025 report, you know I'm looking at numbers a little differently, trying to give you a better idea just generally what is going on and what to expect in the different segments of the market. Because you can look at numbers a couple different ways and they can tell you a couple different things, but there's this metric called market intensity. And that is looking at what percentage of the homes that come on the market accept an offer within the first 10 days. So they come on 10 days later, they have an accepted offer. So in a market where we have a high percentage of properties that are accepting an offer in 10 days, that is very seller friendly and very difficult for buyers. So as you can see from this bar graph, the last three Q1s, we've seen more than 50% of the homes that were listed on the market accept an offer within 10 days. And you may recall the single family market has been incredibly competitive for many years now. For Q1 of this year, we actually saw a dip in the market intensity. Now, don't get me wrong, when more than 40% of the homes are accepting an offer within 10 days of being listed on the market, those are really tough conditions for a buyer. But as you can see from the graph, that's a little below what we've been experiencing for the last couple of years. And you can see the median sale price after, I can't remember the last time we saw a significant dip in the median sales price. Generally, year over year, we're looking at the Q1 of 2026 compared to the Q1 of 2025. We actually saw basically a tiny dip, a flat line of the median sale price of a single family home. And that is in spite of a decrease in the number of new listings we saw in the first quarter of 2026 compared to the first quarter of 2025. So that's really surprising. That is a dip in the number of homes, which generally causes an increase in the prices, but we saw a decrease in both the market intensity and a slight decrease in the median sale price of a single family home year over year. Now you might be saying, oh, Tom, here's the sign, the market is correcting. And well, yeah, the numbers would suggest that. I think there's some important context that we have to consider when we're looking at these numbers. Q1s are always a little tricky. We're talking about January and February, which often represent kind of the tail end of the winter market, and then March when we're starting to ramp up into the spring market. And if you remember, I know it feels like a while ago now, we had a lot of snow in January and into February, more snow than we've had in a few years. And weather usually dictates when we start the spring market in Greater Boston. And the more cold temperatures we have, and more importantly, the more snow we have, the slower we start ramping up into that spring market for a couple reasons. People don't like to go out in the snow. They don't want to have to trudge through snowbanks or not be able to walk around the property. Or if they do have to be in shin deep of snow, it's cold. People just don't like to go out and start looking at houses when those are the weather conditions. And additionally, sellers don't want to list their house when there's snow because they don't want people to have to trudge through snow to get in their house, have wet spots all over their house, dirty boots, and then they know that their property probably isn't going to show as it could when there's a lot of snow on the ground. So a lot of that had to do with explaining our slower start to the market. And then once that snow began to melt at the end of February, we were starting into March spring season. Things were going good. We had interest rates that were looking good. And then we had the conflict with Iran, whatever you want to call it, war, military conflict. I'm not here to debate that, but that did have a significant impact on consumer confidence and, more importantly, mortgage interest rates. And we'll get into that more a little bit later. So to start the quarter, we had a lot of weather impacts that were slowing the market. And then once we started ramping up and things started to get more into spring market conditions, we had some economic conditions that really stifled the market. So what have we seen in April? April, small sample size. We're only a few weeks in here, but we have seen some stabilization of interest rates. There's slightly less uncertainty with the world politics and the military conflicts that we find ourselves involved in. So we have seen a little bit more stabilization of the market. So where the first 3 months inventory was down slightly, we are now more even. April, we saw a little more listings in April of this year compared to April of last year. So looking at April, and granted, this is a small sample size because we're just towards the end of April, and that's just a few weeks ultimately of a market. We haven't continued to see as significant of a decrease in year-over-year inventory. Not an uptick that I would have hoped to see, but we're not 5% below like we have been the first 3 months. And we are seeing that increase in the median sale price. So whereas we saw it flat for the first quarter, it's up about 5% year over year so far in April. Now let's look at the condo market. And if you've been watching these updates for the last year plus, you know that the condo market has lagged behind the single family market. We kind of have two very starkly different markets between the condo market and single family market in Greater Boston. And for this market intensity graph on that final line, I added single family homes for this first quarter, just for comparison's sake, so you can kind of see where the condo market relates to the single family market in terms of market intensity. And for the first quarter, you can see that fewer than 30% of the new condo listings accepted an offer in the first 10 days. And you can see in 2023 and 2024, it was close to 40%. Then in 2025, it was around 35%. And now we're at about 28%. So we're continuing to see that softening of the condo market. And as you can see from that last line, the single family market, we're seeing about 45% of new listings accepting an offer within the first 10 days. So I would term that market intensity to be selective. Buyers are selective. There's inventory to look at. They're not out of a rush to make a decision. And so if you're a seller, the likelihood of you accepting an offer very quickly is unlikely. And you can see the median sale price of a condo year over year is actually down 1% in Q1 of 2026 compared to Q1 of 2025. And honestly, I was a little surprised that wasn't more dramatic. And you can see the inventory was up just 3%. But I can tell you after looking at those April numbers, and again, it's a small sample size, inventory through April was up 20% year over year. So a dramatic increase in the number of condo listings year over year in April of this year compared to last. So when we ultimately see the final numbers for what came on in April, and that's generally not going to be known until May or early June, I think we're going to see a continued decrease, at best plateauing of the median sale price of a condo in Greater Boston. Now, that's not to say there aren't pockets of areas and certain types of condos that get a lot of attention in certain areas. This is more a generality. And frankly, the city of Boston, where we see a ton of condos, is going to have a major influence on these condo numbers. And that is where we're seeing the softest condo market in the city of Boston itself. And so while I attribute the issues with lack of inventory and just stagnant market for January and February to weather, in March and then so far in April, we have a whole different culprit, and that is mortgage interest rates. And if you saw me at the end of last year, I was pretty optimistic of interest rates. This is what we were looking at. As you can see, over the course of the past year, interest rates had been continuously lowering, making affordability much better, making buyers much more comfortable. And coming in through January, we had reached the lowest mortgage interest rates we had seen in the past year, and they were pretty dramatically lower than we had seen that prior year, an entire 1 percentage point lower. And then at the end of February, we had the beginning of the conflict with Iran. And as you can see, interest rates shot up sharply. Mortgage interest rates went up about 0.5%, erasing about 6 months of rates that had steadily gone down. And that's to say nothing about just some of the uncertainty people start to feel when you have situations like that, both about just their general day-to-day and the status of the economy. So if we just focus on the end of that chart there, where we look at January of 2026 to where we are now, we are in a worse position, but maybe not as bad as we had it about a month ago, as interest rates have begun to stabilize a bit more. So I'm calling it better today compared to where we were about a month ago, but in general, we're worse. And what's going to happen? What's the outlook? Anyone can tell. You know, you can never predict these things. Everyone had predicted softening of mortgage interest rates and had good reason to believe that we were getting to some stability. But you never know what can happen in the world, and there are a lot of factors that impact these things. And you know, I would love to say that hopefully the worst of the blip of the interest rates is behind us and we'll continue to stabilize and continue on the track that we were on, but really hard to say at this point. But that's the trend we're currently on, and hopefully we continue there, because interest rates have a huge impact on what happens in our market, both between the number of sellers we have and buyers. All right, Tom, all that's good, but what does that mean? Well, if you're a buyer, it really depends again on what you're shopping for. Are you looking for a condo in the city, or are you looking for a single family in the suburbs? Either way, you need to understand how sellers use different pricing strategies to get different results. Is this property priced low to generate a lot of competition and drive up the list price? Or is this pricing on the high end and not necessarily used to generate multiple offers, and might be a seller that has a price in mind where it's the number that they need to move forward, and they're not necessarily looking for multiple offers? Know what's important to you in the home you choose, especially in the single family market. You're going to find yourself in many multiple offer situations in all likelihood. So really being able to identify, is this really the house I want to extend myself for? Does this check those big boxes? It's fine to have a whole bunch of boxes that you want a property to check, but in reality, most homes are only going to check some of those, and really identifying which of those are most important to you, so you can really evaluate a property in a way that is focused on the most important things is really important in the home buying process. And then understanding the tools that will give you an advantage. And this can come into play with either of the scenarios you're in, either when you're in a bidding war or you're in a situation where you're not competing with other buyers. Know the different advantages you can deploy to give yourself a better chance, whether or not it's knowing your flexibility with timelines, with deposit amounts, with financing options, with your pricing. Understanding all the different tools that can be used to come to a deal is really important, especially in multiple offer situations where even the smallest little details can separate you just enough from another buyer to make sure that you get that property over them. And if you're a seller, well, you really got to know what the market is for your property. There's so many disparities in the market depending on where you are, what you have, what the price point is, what the condition of the property is. You can't really make general statements about a value of a property nowadays. And understanding what the most recent intel is saying, what happened a few months ago might not be very relevant to what happened most recently, as little as weeks ago. And having an agent that can help you and guide you with really understanding what your property is and how to strategically position that property for the best result is really important. And understanding that is going to help you position your property from a pricing standpoint to get you the best result. If you're in a market that's really soft and is really buyer friendly, pricing it at the low end of your market value might not have the result you're expecting. You might not get that multiple offer situation, and then you find yourself stuck at a price that might not be in your comfort zone. So maybe with your property, a different pricing strategy makes more sense for your comfort zone. So really understanding the disparities in the market and will help you guide your pricing to be best positioned to have the best result. And that leads into the next one, timing and pricing. Our market started pretty late here for a spring market, thanks to the weather. And then we've had the other factors we've talked about kind of delaying things. So we could see a spring market that bleeds a little bit later into the year than usual, but more often than not, we're going to have a certain cutout date where we just start to lose a lot of buyers in the market. Generally, that's early summer, usually definitely by July 4th, when people who haven't yet found a home, they start having plans. They want to go to the beach. They want to have that cookout. They don't want to spend their weekends just looking at houses. They're burnt out. So you lose a good segment of the buyer pool. So understanding timing and how that timing should affect your pricing is going to be really important if you're a seller. So that's it. That is your Q1 2026 Greater Boston market update. As I end all these, everyone's situation is different and unique to them. So I'd be happy to advise you very specifically to your situation, whether or not you're a buyer or a seller. So please don't hesitate to reach out. You can give me a call, shoot me a text, or send me an email. I'm here to help you. Thanks for watching. And yeah, it's crazy out there. Hopefully we'll have a little more stability soon. Thanks for watching.